who joins in with his quick take. Hi, Mr. Ravikumar. First up, congratulations on a very, very good quarter this time around. We've seen a big bump up coming through from exports. Margins have surprised on the upside. So is this kind of performance now sustainable for you?
You see, certainly the at 933 crores net, it is a very good set of numbers. And if I take it back to the EBITDA level, certainly you've seen the improvement to 22.1% at operating EBITDA. And what is really interesting was, last time around Q1, there was a lot of discussion about this ARPU, this average realization per unit. And I'm happy to report that this quarter, the ARPU has actually gone up to 57,700 from something like 55,400 in Q1. What this ARPU nicely combines is a combination of factors. The Pulsars, Avengers, and those KTMs, all those high-end products have sold very well this quarter. They've done very, very well. Mm-hmm. And exports, like you mentioned, has done very well. Three-wheelers have done extremely well. Spare parts has done very well. So ARPU has gone up, and at the pre-tax PBT level, the jump that has come in that between Q1 and Q2, 180 crores is the improvement in the profit before tax number that is attributable straight to the operations. While the total units itself was 10,13,000 last quarter, 10,56,000 this quarter, but roughly there, about 3% or 4% more. But the PBT, 180 crores is the amount that has come in from the operations. That is the underlying strength of the mix, and the foreign exchange, of course, out of 180 crores, some 52 crores has come from the exchange. So it has been a good set of performance in terms of profitability and profit after tax and things like that.
Okay, Mr. Ravikumar, this is Sonia here. Just wanted to ask you what percentage of your margin improvement in this quarter has come courtesy lower raw materials particularly, and going forward in the second half of the year, would you expect a further appreciation in your gross margins?
It's in terms of, let us say, the main drivers, we have seen our Forex booking is a very astute policy. We have done some very clever bookings as far as Forex going forward is concerned. And that is a big factor, basically because, almost 50% of our earnings are coming from in dollars. The second thing is three-wheelers. There have been a good bump up in Q2 as compared to Q1. And we have already seen that in Maharashtra there is a 150,000 type of permit tranche that is opening up. It will pan out over a few quarters, but that has already been sort of announced. And of course, Delhi, Karnataka, Kerala, Gujarat, in these places, the fresh permits that have already been triggered, they are ongoing. So three-wheelers is a good story that is there. Exports is a good story. Forex is a good story. And add to that, this time we'll be getting into the Avengers, the three variants of Avengers which are going to hit the market already in production. They'll be hitting the market soon. These will bump up the ARPU a bit more northwards, and they are high margin products. So I think in the near term, things are quite looking interesting even on profitability terms.
Okay, so just to get a slight sense of what the average realizations could be, this quarter you're sitting at average realizations of more than 55,000 rupees per unit. What could it be in the second half of the year on an average?
See, the ARPU you're talking about the second half. You see, from Q1 55,400 or so, we are in Q2 we have gone to 57,700 or so. So that is a jump because last quarter I think there was a lot of querying and hulchal in the analyst fields and with the media about the ARPU falling from Q4. That time I explained it because it was a base effect and things like that, but that's what we have proved, because there was a lot of doubt whether it will even further fall in Q2. That has not happened. In fact, we have improved it to 57,700. But I think with the mix strategy, where we are trying to attack also the entry segment with CT and Platina, and the top end with Pulsars and Avengers and KTMs and all, and exports being half the story. With the exchange, even today it has gone north of 65. Over a longer duration of, let us say, 12 months, 9 months, 12 months, we expect the rupee to gradually depreciate only, basically because otherwise we lose as a country, we lose the strength in exports and things like that. So we expect that these drivers will continue the momentum going forwards in terms of realizations. But I'm not able to put exactly a number to what it's going to be in Q3. But I think the delivery of 57,700 in Q2 should speak for itself.
Fair enough. Just to get a sense of what the volume growth could look like, in the first half of the year, your total volumes have been somewhere to the tune of 20 lakh units, 10 lakh in Q1 and about 10.5 lakhs in Q2. Do you think this run rate could be sustainable in the second half of the year? And also, if you could give us an expectation on the export front as well, what the volume could be in the second half?
See, I'll in terms of total numbers, this type of number, 2.5, 2.6 type of a number should be there in the second half in terms of total. So the run rate certainly of H1 should be maintained in H2 taken as a whole. Then coming to exports, we have guided for 2 million for the full year. As of now, certainly we are holding on to that 2 million. First H1 results are just 3,000 units shy of that 1 million mark. But that said, I should certainly say that in Q3 there are some headwinds. We are watchful, but I'm not able to place any specific number on Q3. But we are hopeful that even in Q3 we should sail through. But overall, for the year, we should hold on to the 2 million guidance for exports.
Okay, so 2 million guidance for exports you will hold on to. And just to come back to my colleague's question, will you be able to retain your margins at this 21.6% level for the second half of the year as well? Or have we seen the best performance already this quarter?
We hope to. Basically, I think how the competition plays out in the near future, we have to see. How the numbers play out, we have to see. But we hope to maintain this margin. And certainly, once you are beyond this EBITDA of 21, 22 type of a number, I think everything is damn good there. A few bits this way, that way doesn't make much of a difference anyway.
Okay, now coming to the question, the slightly uncomfortable question that we always ask you about domestic market share, which is still sub 20%. And the fact of the matter is that there is a bit of fatigue factor with some of these new launches as well. The CT100 and the Platina got off to a great start, but the volumes have dwindled in the last couple of months. What do you expect the domestic market share to be, say, in the next 3 to 4 months? And how do you deal with, some of these these products that have flagged off in the last couple of months?
See, I won't say the CT100 or Platina have flagged off. Certainly, there is a seasonality. I have explained to you in the past. After the marriage season, during the monsoon in July, August, typically these products tend to trend a bit lower. And again, like in the month of September, we shared the numbers. It has gone above 90,000 type of a number, and they are doing quite well in the lower end of the bracket of the motorcycle industry. And in terms of the higher end, of course, the Pulsar RS and KTM together, we are growing at a feverish pace in that super sports segment, as we call it. We are at a 66% type of a market share. On the back of the AS twins launched in the Pulsar area, again we have notched a few basis points market share. And certainly, so whatever we have done in terms of product action in the last 12 months are certainly continuing to stand. They have certainly not lost steam, as you are trying to sort of imply. They are continuing very nicely. In fact, in RS 200 and all, there's a waiting list still. Avengers will add a lot of impetus. I think, like I mentioned at the end of the beginning of this month, they can very easily settle anywhere plus minus 15,000 from the current 3,500-4,000 type of levels per month. So that is going to be one big kicker that we will get from Avengers in the current quarter itself. And about the mid segment, we have to wait for the new product launch in Q4. And I think market share, as I told you, exit in March, we should be again somewhere around 22% or so.
Okay. Then one final question before we let you go. You think the second half of the year will be better than the first half? Because the last time we spoke with you, you indicated that Diwali is not expected to be, a cracker of a festive season this time around. So you think that there could not be too much of a growth in the second half of the year?
In terms of the total profitability and all, as I told you, we should be in the 21 plus type of a range, even for the second half. That said, certainly the festive has been so-so. First 7-8 days of Navratri have been so-so. Rural is still not we are not seeing any big buoyancy there. But in a industry situation like that, I hope that Bajaj will do better basically on the product strength.
All right, Mr. Ravikumar, we leave it at that.